The broadcast is now starting. All attendees are in listen-only mode.
All right, check, check. Morning, morning, afternoon. Okay, for those listening in from work, hello. For those that are recording, hello. Okay, Tim, remind me. Mark, I'll have to go back and look. I thought it dated them. If it doesn't date them, I'm not sure. I thought it dated it. I thought it has it by date, but I'll look again. Um, yeah, they have it so it's not downloadable, but that's also we're speaking out of we're digressing here for a minute to IML stuff. They've got it so it's no longer just the last 5 recordings. The new OBS system is going to keep every single recording. They're not going to bring the ones from the old recordings back over, but from here on out, it's every recording gets, well, if you were there live, you see it gets, as soon as I cut the session off, it's like 1/10 of a second and the recording's there on the listing. So they're going to have all of them. So it's not as, I mean, if you're downloading it and putting it on a tablet or a phone or something, well, you can get to the IML TV anywhere. So the recording should always be there. But yeah, there's been a lot of issues with that, and I think as a way to prove, as always, sometimes there's need to do it. I've done it before where I've downloaded and shared it because it was a generic session, so to speak. But of course, when you have people kind of doing trying to stay inside the boundaries, you also have people that will take advantage of it and go outside the boundaries, and that's what they're trying to shut down. I will look to recording speed. But it's surely a much better system. The clarity of the recording, the clarity of the screen on live is good, and the recording is there instantly. So, hey, Tim. All these Tims around. 75% line. Yeah, I can do that real quick. It's all right. We're just getting started a little late today. I was wrapped up in a call, and I had to get my coffee. Sorry, my keto coffee to start the rest of the day. All right. So, let me see. Where I might be with that. To answer a question. It's of use here too. It's taught at IML, and since somebody asked, I will answer. Hold on, gotta share it. So many different systems now, it just drives me nuts. All right, let's see when this comes across. There it is. No, my keto coffee is okay. It's not coffee. It's a special coffee with my keto bomb in it. Oh, that's so good. All right, so this was the yeah, no, it's not quite what do you call that? Bulletproof. But it has MCT oil. I don't put butter in it. It already has enough MCT oil in it. Yeah, Bulletproof's about 3 years behind the scenes. Keto's Keto's the thing now. What can I say? It takes a long way for the stuff to sail down under, I guess. Is that way? Give me Coke. All right, so real quickly, the Christopher Terry thing. Whenever you see a wedge or a diagonal, or let me scrunch this a little so it looks a little bit better. He likes to call them coils, and I saw him do this, oh geez, I don't know, 5-6 weeks ago, maybe for the first time. And so what he says is it's just an old trick, just like, a quiet trick that's, old traders know, just like the DC 45 thing is. So when you have a wedge or a triangle or a coil, extend the lines fully out. Okay, extend the lines fully out. And so they intersect. And so the way this tool works, it's just a Fibbo time tool, so I'll take it off completely. And in this Fibbo time tool, it's under pitchforks at the bottom. Well, not quite at the bottom, right? Fibbo time zone right here. And so what you do is you initially set it up, and I'll show you the format on it. Hold on. Whoops. Yeah, just don't mind me. There it is. Where you format it to just show the 0 and the 0.75. Okay? The 0 and the 1 and the 0.75. Those are the only three variables you need. And so what you do is you're essentially saying, I'm going to create a 0 line here, and you click, and then as you drag, and then you stop wherever you want your 100%. Just like a Fibbo, except we're going sideways with time. With the 75 line on there, it drags it around, and I've got it colored red just so you can see it. So the little trick says, look for, draw your wedge or your triangle or whatever. Look for, and you're going to need a hit or two to start to see what it's looking like, right? And quite frankly, the second bottom here wasn't until there. So you draw it, and you look for the first hit into the coil, and that's going to be your 0 line, and then your 100% line is going to be their intersection. So you just drag it over, and I'll put it on that red wick, boom, and then you drag this line to be the 100%, the green line here. I get it right on the intersection, and the rule is in those coils, the 75% is where you will most frequently see the break. I've seen it plus or minus, but I was pointing this one out because I just learned this, like I said, 6 weeks ago. Volume's off. Test, test. Is volume okay? Okay. Some people said it dropped. Okay. So you drag the 100% line to the intersection, and as you can see here, my vertical line is sitting right on top of that candle that had the big drop. So in this particular example, it was, oops, and I got that just a little off, but as close as I can get it without jumping. So this time it happened to nail it 100%. Well, I'm not going to get into the wave reading here because this is Bitcoin, and I don't do a lot of wave reading in general. But, you know, you'd have to look at the larger waves, but coming down this way from the high, this does look like, a continuation. But it's not so much about the continuation. That's a secondary reality of your understanding of chart patterns. This is just marking in these kinds of patterns, in these wedges, triangles, coils, how, when and where you might expect a break. And like I said, I wouldn't put an entry order on it or anything, but it's just a nice little tidbit of trivia trading for advanced traders. And this one, it just happened to nail it exactly at the 75%. And so you'll see this on the EU as well. Yeah. Okay, come on, let me delete some of these questions so I can make sure I stay current with them. Is there something we can pair with harmonic wave convergence or pot? Well, I heard brownies are pretty good with pot, but I wouldn't know. Just kidding. Something you can pair with pot. I don't really understand that question. Is there something you can pair with harmonic wave convergence or pot? Yeah, Charlie Delta pitchforks on a harmonic scan. I mean, you've got it backwards. You don't want to pair something with harmonic wave convergence. You want to use harmonic wave convergence to bring the confirmation to anything else. We teach it so you understand it, but the 75% rule, that's just going to be your understanding of the waveology at that point in time. What typically happens is these things go, and again, remember when I say typically, we can assume I mean vast majority of the time, but it does not mean always. So, when I say, oh, this typically happens, what ends up happening is I get 10 emails with pictures where it didn't happen. And, as again, these are exception hunters. And, it's like, remember, I didn't say always. I said most of the time, frequently, very often, the vast majority of the time is what you'll see. But what you'll see in your indicators very often when you get like this is they get very disproportionate, and every one of these swings becomes a convergence. Even this last little one down, they become convergences. So funny, Zoe, yeah. It's all right. Yes, TAB29's relative price and tops and bottoms. It finds tops and bottoms. So when you see those gross exaggeration, like you'll see, I mean, look, you may see a convergence here, and you may see a retracement, and then you might see a higher convergence, so it just snaked up that far, and then you'll see another convergence down here. And then the next thing you know, so you're looking at the span of price movement for those convergences, and the next thing you know, it's telling you that's a convergence. Well, it's the top of the channel at that point. That's why it's telling you that sometimes. And so you get down here to these very far end of these wedges sometimes, and these are going to be convergences. So if I have a wedge like this, I've got that as my 75% line, and that ends up being a convergence, you bet that's a good sell. Okay. So it's just a little tool, it's just one of those tools. And that, I mean, Chris is a 20-year trader veteran. I mean, he's traded mega $1 million accounts. So there's tidbits you'll pick up with that long. You know, I mean, I learned he's got 5-6 more years on me, and I learned a lot from him. All right, so we got that out of the way. So a couple other stuff going on here. Let me see. 30-minute wave not being an influence. Well, there's two meanings to that. And the first is so in the the shredder side of things. Remember, when you're a green trader, you have purple and blue, right? So you've got the subwave and the primary wave. You've got the 5-minute and the 30-minute wave. And you make those trades, and sometimes things happen and sometimes they don't. And, I say, don't worry about it. You got more to learn. And then, you get your way to bronze, and, you move to silver. And in those stages, you learn that things like the 30-minute wave, things like the 4-hour wave will impact the 30-minute wave. You learn that the 10-minute wave will impact the 30-minute wave that you didn't see before with just the 5. Well, Sam, so I'm going back and forth from where I am now to where I was. Let me just finish up because I didn't say that, and Tim's reminding me. Thanks, Tim. Come on. Why won't it pop up now? Oh, it's there. I just have this on. That's why. So the reason I drew this is because it had pulled back, and I was waiting to see the kind of pullback it was going to have before it dropped further. Now, again, there's two kinds of pullbacks here. You have a shorter term pullback, and then you have this bigger term pullback. But this, we started to get in this progression again where the pullback, each successive pullback was lesser. And I could see, a good trend line, whether you want to call it a wedge at that point or not. And so I said, that's a trend line. And, I have enough work with pitchforks. And remember, I teach ghost pitchforks. So what ends up happening is, because I teach them, it's because I trade them. And I trade them because I'm very familiar with them now. And a ghost pitchfork involves where you have an area of the chart that is very susceptible to a pitchfork, and you have a pitchfork there, and that pitchfork's getting good hits. And then you have a price move like this, where it just jumps a zone, and there's nothing in that pitchfork that can work, etc. So typically what I would do is put on warning lines and or external Fibonacci's, and project way down into where that price had ever moved, or sometimes it moves way up, in case here and then a case down here. It's not a pitchfork, but I'm just telling you where the concept comes from. So I know if I have that good pitchfork, that the angle of that pitchfork, despite the fact that we've had some massive drop, the angle of that pitchfork is going to hold in this realm down here. Or if it's a massive jump up, the angle and slope of that pitchfork is going to have its its realm up in the new high or higher range, even though you have nothing to connect the ranges, so to speak. So when you do, extra warning lines or external fibonaccials, you then can draw a fork down below or just copy the fork you have up here and attach it to a single high or single low. And a large percentage of the time, I won't say VMT, but a large percentage of the time, that fork that you just threw on there on nothing but a swing high or swing low, because you duplicated the angle from whatever happened previously, that fork is spot on. So the ranges and the angles of moves like to repeat until they don't. So as I saw these tops coming on here, what I did was I just went to this pattern and I cloned the top and I brought it down. It's going to let me do it. There it is. And I brought it down and I sat it on that one big wick, and lo and behold, all the other, the continuing bounces did it. And eventually it's a bounce off that wick that had that big move there. So it was just truly a test in market geometry. That's all it was. So that's why that line is there, but it's the exact same line. It's the exact same angle, as this one here, just copied and cloned on down. Anyway, thanks for reminding me about that, Tim. All right, so let's go back to our drawing board. So 30-minute, not an influence. Out of sight, out of mind, we'll talk about that, or impactful. Those are the two ways that the 30-minute wave can have its influence. And when we see impactful, we're talking about impacting the chart. And when we talk about impacting the chart, we're really talking about impacting the plots that you see. It's impacting the waveology of what you see going on. So out of sight, out of mind has two meanings. Like that very early, bronze trader who now has the 240 wave, and he's understanding some things that didn't make sense previously, are caused exceptions to the rules. That's generally what happens when we introduce new material. All of a sudden, the exceptions that we saw in the past, all of a sudden are justified now. We understand why they were exceptions, and where you'll constantly hear me say, we can't give you I don't think it's a good idea to give you the 50,000 page PDF on harmonic trading, because it'll just be overwhelming. And you kind of have to earn your way through volumes of trades before you can understand. Then it makes sense because you understand it because you did it, which is why when people are handed the 50,000 page PDF and they jump to the end, like trying to read the conclusion to a book, they always fail because they didn't do the work to understand what's going on. So out of sight, out of mind, one, just because it's not there, not there. And that could be physically or it could be mentally. And that can mean whoops, or that can mean planned. So, and we're going to talk about that plan part as we look at this. Oh, I've run out of ink space. It won't let me draw in that space. I don't know when that happens sometimes. By design means I understand it's there. I understand it has influence, but quite frankly, for what I'm doing right now, I don't care. So the problem is, it's not going to let me draw it. All right, so there's a D there at the end. Trust me, I just can't get it in. The pen stops. There's a difference between whoops I didn't see it, and I see it, but I plan on not letting it bother me. So let's talk about how we're using it here in terms of take a 10-minute harmonic wave convergence trade without the 30-minute wave influencing it. The initial reference there is about 10-minute trading. So we're talking about a 10-minute wave converging and regardless of where the white, where it happens. So we're talking about that, and when can the 30-minute wave influence? Now, influence doesn't mean bad, and it doesn't mean good. It can mean both or. Either or. It could be a bad influence on that trade, or it could be a good influence on the trade. If my 30-minute wave is also converging, but it had converged previously, and now it's sliding in here, I have to put a question mark by this trade. I don't know how far it's really going to go. We never know which of these snake moves is going to be the actual convergence that reverses price. They're a convergence, but is it going to be the one that reverses price, or is there just going to be a tiny pullback before it continues to snake? So the 30-minute wave here will influence this move, or it may influence this move by keeping it short or being the final reversal and letting it take off. So it's just a thing that says, as a trader, I have to be aware that I can't treat this 10-minute convergence as if the 30-minute wave was not on the chart and was not on the chart influencing me. I have to see its influence or its potential influence. Now you see, we're moving to advanced levels. So the brand new trader is going to understand all this, and that's okay. You're not supposed to. That's why these OCRs are recorded and put in an archive. So when you are ready to receive it, you'll understand it. Just because I'm doing an OCR and just because you're a TAB29 trader doesn't mean you're ready to see this. I've got traders in this room right now that are in here a week or two. I got traders in this room that have been here with TAB29 since June a year ago when we rolled it out. And I can't do 27 different OCRs, you know? So, we do things within the realm of TAB29 and the way it can be traded and learn faster that help you get this and be safe from stuff where you don't see this influence. One of them is called POT trading, which is why it's introduced and available. Because whether this is going to be a big move or a small move doesn't really matter, does it? If this 10-minute move, and I don't need to make the 10-minute farther out than the one. If this 10-minute move is going to be short or it's going to be, the first impulse up is going to be big, it doesn't matter because the POT exit is the same. It is the money management of that exit is the same. Oh man, just all over today. It is a peak one flip plus a trend bar flip, meaning all of them, or 40%. So whether that is incurred here or incurred here, you are safe from the 30-minute influence. Does that make sense? Are we on the same page with that? if you're POT trading. If you're not POT trading, you may think a pullback like this is just a wave too. And the next thing you know, you've just gone on down. Here, in the indicator, it stops down here. But in price, you've gone to a new lower low. Which means what in terms of your trade if you were still in it? So that dot is that dot, and that dot is that dot, and at the lower low, you are now -3. So if you were just in here, well, I'm going to go 10-minute to 10-minute, and you weren't thinking, I mean, I've had it look just like this on the charts. You see the 30-minute wave, and the trader says, I'm going 10-minute to 10-minute. They don't even see the 30-minute wave. Their RAS is so focused on the 10-minute wave, they don't see this. So they're going to try and go 30 to 30. They're not counting on the fact that this 30-minute wave has already had, 4 10-minute convergence in it in front of it. They're just taking the fifth one, and they're expecting it to go to the opposite side of the chart. That's what they've told themselves. So the RAS, that's what the RAS shows them. It doesn't let them see the other stuff. So they don't even see the 30-minute wave. And lo and behold, they're going convergence. They don't want to do that POT trading because they don't want to mess with it. Next thing you know, they're -3, where they could have been +5 or +15 or whatever. So the 30-minute wave may have its influence. And that's a good example of one way it can have its influence. Yes, your exit over here for your money management is trend bar flip on a closed candle, which is why we have the 40%, because sometimes you just don't have room for that. Or you have one of those candles, perform like I showed on that wedge breakout, that it just hits and goes. So you can't wait for that to close. If it's at your 40% line, you need to be out of there. Now, same thing applies if you enter the trade and the 40% line is already below your entry. In other words, at the time you entered the trade, that was the high. And price starts coming back, your 40% may already be, this is why you don't want late entries. But sometimes you're just catching the very top when it decides it wants to snake some more. Your top is the end of the retrace from the snake, and now it's going to go down and converge again. So you have that quick, in original form, we call that a T4. There's just nothing you can do about it when you have a snake that, as soon as you enter, wants to be impulsive and go right against you. You almost think, this leads to the broker, hunting stops and stuff. You almost think there's a broker out there with somebody designated to watch you. Hey, Zoe's on the computer. We better watch where she is. And oh, look, she entered here. Let's make price reverse right here, right where she entered. I mean, sometimes the timing of your entry being the very, very, very top of the retrace is so coincidental that you're going to end up thinking that. You're going to think, oh my God, they're watching me, and here I am 5 pips into the trade, and as soon as I enter, it reverses 20 pips. That must be the problem, Zoe. Yeah, or you're trading at 16.52 and the spread goes to 13 while you're trading. That's funny. At least you can joke about it, Clay. So, yeah, so that's the 30 influencing it. Okay. Now, let's reverse this. Let's talk about the exact opposite of this. Again, out of sight, out of mind, and that might be physically, that might be mentally, because of your RAS, because of what you think you're doing. So again, nice, I'm not going to show the history here, but we'll just jump into it. A nice 10-minute convergence. And you're sitting there going, well, again, part of the challenge is we each have different RASs, and this is what the law of spirals and more so the trader physiology movie or video is all about. If you haven't watched the trader physiology video about how the trader's brain works, you need to watch that. You need to watch that. That's a significant video. I think anybody thinking about trading or anybody on their first day in trading should watch it then, but be aware of it. So what happens is I'll do a continuum training like this or review, and there might be 5 or 6 major elements. And what happens is some traders will remember all of them. Some remember the first few elements. Some will remember the last few elements. Some will do a multiple choicing in between, because we'll see them quoted in a post later on, omitting the other things. Right, Zoe? So a trader will have this convergence and go, oh, wait, Steve said it might be a shallow trade, so I got to be, I got to be wary of that. Got to be real leery of this just coming right back on me. And so, the slightest wick, they got, and trust me, I've seen it. So, I don't have to make up stories here. This is all coming from what we see. They're in the trade down here and up above. Oops. Up here, they have their trade, and it's going, and it's going, and it's going, and then all of a sudden it does this, and they're like, oh crap, got to get out of here. They're trading by price and emotion and fear and everything else, and they're not watching that, yeah, this was just a little flattening out here, but they see this pullback, immediately they exit the trade. Why? Well, Steve said this might come back down, and I don't want to be caught. I want to, I want to get these plus 4 pips. I don't want to end up -3. That's what Steve was telling me. Well, first of all, I don't think you'll see a place that I've taught you to exit on a wick pullback. You need pullback, but you need something else. So we don't trade naked. Naked trading. So this kind of thing will happen. So, but what happens here if this was the reality? So I'll backfill now. Now the 30 minutes in an influence in the opposite way, because this extreme qualifies for the fact that the 10-minute wave is retracing against the 30-minute snake, and maybe there never was a pullback at 20, but it went to the second spot where it's converging. So this is a 10-minute retrace extreme against a 30-minute snake. This should be one of the strongest moves you can take. Now, it may cycle, but nonetheless, it's going to be one of the strongest moves you can take. Yeah. So be aware, so same 10-minute convergence. One, the influence was to suppress the height of the, potentially suppress the height of the move. And the 30-minute wave snaking like this potentially will accelerate the impulsivity and, the higher probability of this move, because there has to be a convergence to satisfy this. So, there you have it. So those are the two major ways the 30-minute wave can influence. Now, it's important to understand and not misinterpret what I've said. Because we'll have traders do that. Oops. Really? That's a 10-minute wave, not really at major influence. It could be, but again, we want to go with the majority of the time. We want to go with that 80-85% reality. So let me ask you this. And newer traders, you can only guess. Intermediate to advanced traders, you should think about this. Remember, yeah. So in those two examples I just gave, let's say the first one versus the second one. So the first one was you were in a snake. And remember there we said the influence of the 30 doesn't mean it will, may suppress the 10-minute wave. You were opposing a snake, still a convergence of the 10-minute wave, but you're opposing the 30-minute snake. And when you do that, you may have it accelerate the impulsivity, i.e. the strength, the distance of the 10-minute wave. So what's that mean? Should you not take those trades? Intermediate advanced trader. Beginner, you can guess. So the intermediate advanced trader, should I not take those trades? Okay, Michael, tell me more. Yeah, see, the advanced trader already knows the probabilities of these things. See, this is where I was saying the beginning trader has to guess. Why? Because they haven't had the volume of trades to know. They have no KSP over what it means to be in a snake, a 30-minute snake, where it's sliding, and this is the third or fourth 10-minute convergence on that. The newer trader doesn't have the KSP. Remember, KSP comes from volume of trade. So how can the new trader possibly know? And it's not subjective. There's just a whole hell of a lot of objective learning that takes place in that volume of trades. So it does help set a little bit of an expectation. It's an expectation based on experience. You have to be careful on why you're setting expectations. If the expectation comes subconsciously, you're cool. If the expectation comes consciously and mechanically, you got to beware, because that's going to affect and impact your RAS. Your RAS, remember, the most loyal crew in the world. They're going to go to work to deliver whatever your expectation is, whether it's right or wrong. They're serving you. They're not serving righteousness in the right, that's in the correctness and what's going on the chart. They're serving you. So when you set an expectation, this is why you don't want to do predictions and forecasts. People say, well, what's it going to do now? And you'll always hear me, I don't do forecasts, because I don't want my mind to be set that a certain thing is going to happen on speculation, not on fact. Because when I do that, then my RAS will shut down other things. I gave it its order. Show me the convergence over there. And the crew says, I got too much to process, so all this other stuff we're just going to filter out, and I'm just going to give you the stuff you need to see to make that trade happen. Doesn't matter whether it won't. Doesn't matter whether your thinking is flawed or wrong. And this is why I've said many times, you want to be a robot. You don't want to be a trader, because traders make decisions. And when you make decisions, emotion, ego, and RAS are guiding you. But if you have high KSP in these two situations, one thing you may do is this. Lower the risk and increase the risk. There are some trades, oh my gosh, I think even before TAB29 came along, just in, we say, oh, we never trade the news. Well, some of you know that's a lie. Well, it's a omission. Not trading the news itself, but here's what happens. When you have this kind of move, and then you have this, we automatically know that's a continuation. It's whether it's a wave 3 or a big wave 1, I don't even try and keep count in Elliott wave, but if this thing just went from here to here, and that's 85 pips in one candle, and then the subsequent candle comes down, and so you look for stuff, that's 50, that's 25, so 23.6 is somewhere in here. Most of the time these things struggle to get to the 14.6. And once you have that first pullback that doesn't make it to 14.6, and then the next one comes back and it's shorter than the first one, it's telling you it's going there. And 95% of the time, it's right. Doesn't tell you how far it's going to go, but it's going here. This may be an INS line, maybe a pitchfork, maybe a Fibbo projection. So once this second line is shorter than this line, I'm in that trade. My stop loss is the first and lowest pullback, and I do the buy. I don't care what multi-wave is saying, because 95% of the time I'm going to win that trade. And you bet I'm in 3% or more in that particular trade. I've shared that many years, right? I don't care about all this and getting this right, and I'm not out for big pips. I'm out for high percentage pips. Because remember, you don't want to forget, I'm going to call it the Zoe factor from here on out. Everybody knows I love Zoe, and I love her because she's such a great student, and she's been so supportive over the years. But I'm going to call it the Zoe factor, and I'm going to name it after her for one reason, because she absolutely loves her Coke, and that's with a K-E. And why it's called the Zoe factor is because for that one can of Coke, I better make it red, Coke, right? For that one can of Coke, it's 32 bottles of water to dilute the acidity. 32 bottles of water. So we talked, I don't know, last week or the week before, we talked about the two accountings that take place in trading. One is the financial, i.e. your trading station. And the real power of being a harmonic wave convergence trader with TAB29 and the way I trade, and I just share what I trade. That's all I do is I share what I trade. Is if I get a -3 from an accounting standpoint, that, oh my God, how many 5-pip trades a day are there? Hundreds. I only need one and I'm back at break even. So from an accounting perspective, the -3 doesn't impact me that much. Problem is this, and our brain doesn't care whether it was -3 or -30 or -300. It sees that negative sign. It's like, oh my God. And that one, oh my God, just goes to 57,000 different places in your brain in terms of your trading. A little hesitation here, a little anxiousness there, a little panic there. And it takes a whole bunch of positive trades, just like the 32 bottles of Coke to overcome, or 32 bottles of water to overcome one Coke. So the Zoe factor is in reference to there's two accountings, and it's not just the financial accounting I need to worry about, it's the head game. So I like high percentage trades. And I also remember 5 or 10 pips a day and you're golden. If your head game is stressing, and you may not even be aware of it because it's subconscious, but it'll show up in your life. That one comment your wife makes or your husband makes that normally would just pass on by, all of a sudden you're growling at it. Or subconsciously you're, what a bitch. When normally that's not the case. I'm speaking of people who trade a lot. I'm speaking of traders who are essentially not working a job, but their money comes from trading. So they're, trading. You've seen some of the IML t-shirts, eat, sleep, breathe, trade, repeat, that's their life. So that -3 has an impact. And it permeates everything. Remember, it's not going to be compartmentalized. So you want to protect it. So take high percentage trades. And then within your high degree of selectivity, you still have favorites because your KSP says, this is just too high of a percent. This little flag at the top of a big impulsive move inside one 30-minute candle, and then it starts flagging like that. And that first pullback never makes it 14.6, and the second is shorter. As Brian used to say, in there like swimwear. And at a little higher percent because it's such a high probability. And the thing is, you hear all these guys bragging about these pips they made. You'll hear all the guys crying because for whatever reason they had the setup going that way. And they had their 50 pip stop or their 80 pip stop, whatever, and they end up losing. So you got the smilers and you got the losers. The trouble with that is on the next news announcement, they often reverse positions. And it's a little bit addicting, which is why they keep going back. This will be the same every trade. These guys are doing what? Look at their faces. You don't think that's going to impact their life? Oh yeah, honey, let's go out to eat tonight. I made 85 pips in that trade. You take out the damn garbage. I did last week. Right? So the Zoe factor is there. There's no Zoe factor here. All right, beat that to death. So the question was answered. What can you do? You can be a little bit more cautious when you're in a 10-minute convergence in a snake, and you can be a little bit more aggressive when the snake's on the other side and you're going to it. Remember, though, as I said, depending on the distance to the convergence, it's very rare for this to be one move. It can happen, but it's very rare. Most of the time, you're going to have a couple of, if it's a big move, you're going to have a couple of pullbacks. So one last thing, because I regressed in the teaching here to come back and talk about this. What can you do? Okay. To advanced traders, intermediate advanced traders, because what? They have the volume of trades to recognize that that's their history. They know that's the KSP. Now look, if you have KSP on something and you know it's bad, you know to avoid it. If you have KSP on something and you know it's good, you want to be attracted to that. And if you have super KSP, you have a subset of KSP. I have KSP that creates a pretty high level of trade selectivity. I think I shared this in an IML session the other night. The reality is, remember, your crew is working for you. And you want them to be like a president who has an executive cabinet. You're still going to make the decision. You want them to be working, to see the same facts you do or to introduce more facts, but their consensus doesn't mean you're going to go that way. I've shared this many times over the year. I don't think any time recently, but the whole Abraham Lincoln, when he was doing the emancipation thing, he thought about it, pondered it, and he goes to his cabinet and he spells out what he wants to do, and he says, all those in favor, because he just wanted to poll them. It wasn't a democracy. It wasn't going to be a group decision, but he wanted to poll them. And he said, all those in favor say aye. And the room was silent. All those opposed, nay. Nay, 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 nay. And he stands up and he pounds his fist on the table. And he says, very well, the ayes have it. Now, that's that cute little kind of Andy Andrews reality moment in history. So you're still going to be the ultimate decision maker once you get to be an advanced trader. You know when your RAS is doing things. You know when your ego is doing things. But you want your crew working for you to the positive. Remember, if you've made, as a younger trader, if you've made an assumption, if you've made a forecast, if you've made a prediction, your RAS is going to honor that, not to make you the best trader. They're just going to honor it to make you right. So they do filter in what you want to see, and they filter out the things that aren't part of that because you said, I don't want to see that. Just show me the way that I'm right. So your crew can be your best friend or your worst friend. But when you get to trading at advanced levels, see, remember, what is the process of learning how to trade? It's not getting it right. It's learning what not to do, which is why it takes a volume of trades. You're not trying to get it right by demo trading. That's all about learning. And you'll have prideful ego. You'll have protective, prideful ego trying to defend things rather than just taking it as a learning moment. So you learn to trade by learning what not to do, what not to do, what not to do. So you can recall that in your trade selectivity. See, how do green traders start out trading? They're going down their checklist. It's a conscious checklist. Whether it's on paper, on a Post-it note on their monitor, or in their head, they're going through a checklist. I'm looking for this, I'm looking for this, I'm looking for this. As an advanced trader, and you're trading, either subconsciously or near subconsciously, the thing I'm looking for, and trust me, I've seen the gurus say don't do this, but all those gurus are also in the old paradigm. And all those gurus also teach the majority of traders where you have a 98% failure rate. We don't want to be in that 98%, so I don't care what some of the gurus say because I understand where they're coming from, but they're also old paradigm. And there's too many variables in there. It's not clear cut. It has to do with the size of the stop loss, it has to do with the risk, it has to do with them understanding the Zoe factor. And most of the times the expert traders leave that out because they're not impacted by the Zoe factor. They don't see a minus sign and it bother them. They're in that 3% that can get by with that. So that's what they teach other people. Well, they don't teach them that because they just omit it because they don't realize it's a factor. See, the thing that you have going for you, one, it's just my 15 years. And there was nobody guiding me. I had to understand to learn from my errors. And those first 2 years were very rough. Very rough. I mean, Brian and I won't even count the times because it's more than you can fill on two hands that, we refunded those $500 accounts. We refunded those $1,000 accounts time after time after time. Because our ego said, you got it, you're ready to go. Our RAS and our reality, it didn't match our ego. And my goal, and Brian was in there too, is, look, I don't want you to have to refund an account. I want to take my 15 years and compress it down to 3. I'm not in competition with you. You got to, I've said before, we have more of a parent-child relationship, where the parent wants their child to have the better life sooner and easier than the parent. The parent might not have ever had the good life, and that's something they want for their child, nonetheless a better life. So I'm that guy out there that I'm not in competition with you. My ego's long gone. I'm not threatened by anybody that can come along and be a much better trader than me. I welcome it because I'll learn from them. I'm open to that. But all I'm trying to do is compress those 15 years down to 2 or 3 for you. So that's what my trading is about. That's what my teaching is about. So here's what I do when I'm in that selective mode and I've positively found the criteria that I want. I put my crew to work to say, find me a reason to not take this trade. I've already concluded I'm going to take it. So now look, this isn't all conscious. This happens subconsciously. It's like, rush, 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 rush. Find me the reason to take the trade. Find me the reason to take the trade. Is the criteria there? Is it there? Is it there? Is it there at a super level? Have I ruled out other stuff? Am I not going to say, I hope this works? Gee, this better work. Gee, I really need this to work. I already know it's going to work because the criteria is such a high set. And that criteria is from volumes of trades, it's from KSP, all happening subconsciously. And somewhere in that moment, it flips and it says, okay, we've proven this is that kind of trade. Any last minute reasons why I shouldn't take this trade? Now, right now, you can't, the newer traders, the intermediate traders can't operate at that level yet. You'll get there. Just don't try and skip things. Go through the volume of trades. So you want to work to disqualify a trade. Last night, in an IML session, I was going through how you devalidate a validated pitchfork. And some people were kind of like, what are you talking about? But it's a higher level. It's getting to that point. This is a qualified pitchfork, but let me find some reasons why I shouldn't trust these lines. So I'm taking what is already a superset of qualified criteria to be very selective. And once I get that grouping inside it, I say, why don't I want to take this trade? Now, remember our money management mantra, which is all about conserve and protect, then grow. Okay? Conserve and protect, and then grow. So, understand one way of conserving and protecting is to never trade. To be so exclusive that you don't take trades that are there. Because then you'll never grow. It's a combined piece. It's conserve, protect, then grow. Conserve and protect capital, then grow my account. It's a plus in there. It's an and. It's not an alternative. So you can't just conserve and protect by not taking trades. So what I don't want people doing all of a sudden is like, well, look at that wick, and it happens to be 120 candles in the past. Steve said if it wasn't perfect, I shouldn't take. Steve said to find reasons not to take. So no. Remember, that was the 99 percentile. You've already spent 99% of your efforts qualifying the trade. But in that superset of qualified trades, you want to turn your RAS around in the other direction and say, why shouldn't I take this trade? Because that's how you're going to avoid a -3. That's how you're not going to have to even care what I said the Zoe factor was. I need to give Zoe a trophy because there's only previously 2 named things: Lori's law, Gregor's law. Now we have the Zoe factor. Well, Patrick, you're struggling with it. Why? Because you're a newer trader. And I said newer traders aren't going to get it because they don't have the volume of trades. They don't have KSP yet. Dudes, this is not a step 1, 2, 3, 4 system. You're in the wrong place if you think if trading is step 1, 2, 3, 4. This is a life skill, and it's a life skill that's going to take you years to be a master at. Oh, you can get started way before that. But knowing when to put 1% or 3% to a trade, that's learned. That's not something you just read in a book or a PDF or see in a video and go and do. Because it's based on your KSP, and your KSP is based on volume of trades. So you want to qualify a trade. Well, a simple example, Patrick, would be just what we talked about with the snake being at the bottom. See, and let's just be real here. You're in a TAB29 class. This isn't Shredder. And you need to pay your dues in Shredder before you're going to understand TAB29, because TAB29 is Shredder on steroids. You can't, you got to set your expectations accordingly. You can't sign up for flying lessons and do a flying lesson in a Cessna 150 and then go back and sit in a session for advanced pilots flying the Dreamliner, the 787. This is 787. SFX-30 Cessna 150, right? So you're in a TAB29 session, which, if I was super duper the best coach ever, I would not allow people into unless they've had, 6-9 months in Shredder. So if I have a snake and you're focusing on your 10-minute trades, you are working towards qualifying that 10-minute trade. Oh, it's below 11. Oh, the 1-minute wave is down here. Oh, the 1-minute wave is going up. Oh, the bars are flipping from red to green. and they're almost there, and I'm at 2-3 pips into the trade. See, you're doing all the positive criteria, all the positive selectivity for the trade. And then right before you're taking that trade, you should be saying, okay, I've got it qualified as a selective trade. Is there anything here that says I don't want to take this trade, or I need to be careful in this trade? Now your RES has a different mission. Now your RES is going to go out and it's going to see this 30-minute wave, and it's going to say, oh yeah, here's something you may want to consider. You know, you're not going to learn this stuff in theory. It takes application. That's why you have to go post 100 green trades. And then you got to go do your 50 to 100 bronze 1 and 50 to 100 at bronze 2. To try and grasp concepts like channels and channel sizing, to try and grasp concepts of reversing your RAS right before you pull the trigger. Those aren't conceivable yet, which is why it's a struggle. So, you know, creep, crawl, walk, run. Don't binge watch. Don't binge learn. Binge learning will lead to failure. I'm just telling you. I've not seen a binge learner succeed yet in 14 years of coaching. Binge learning is what? What causes binge learning? I want to see the advanced traders answer this for me. I know you guys can't see this. That's by design. Boom, 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 boom. Look at all those things. Binge learning is either ego or FOMO. That's what causes binge learning. I'd say it weighs heavily towards ego. And deep in your mind, you are saying you're too good to go at the proper pace. You're better than that. You're too good to go at a pace that is the learning pace. Go back to the premise of what I said. My goal is to compress my 15 years down to 2 or 3 for you. That still means 2 or 3, not 6 months. And if my goal is to make you a successful trader, because that's how I get my fulfillment, you notice something about the course. I changed something in 2013. Can't believe it's 5 years already. The Zoes of the world, the Tim Packases of the world. Let me see who else is here today. You know, the most tenured traders that I have. Guess what? They paid $24.99 for the course. Guess what? They paid $129 a month for coaching, for OCRs. And in the old days, they weren't recorded. You had to be there live. They paid $127 a month, and then it got lowered to $100 a month. So they paid $129 and $100 a month, $229 a month to have the tools, meaning ongoing coaching and charts. And there'd be a few hecklers, haters. There'd be a few haters in there that would accuse me of dragging out my training because I profited from that. The longer I could keep a trader not quite there, there's another $120 in the pocket. That was never the case, but it was easy to make that statement. Again, that's ego. I knew why they were making it. It was never a serious consideration from me. So in 2013, I said, no more. You know, we're going to drop any ongoing fees. And it went to one fee to get this. Now let me ask you something. Do you think I want emails from you? Do you think I want Facebook messages from you? Do you think I want text messages from you or demanding a phone call to explain something as long as I can. So tomorrow I get another one from you, and the next month I get more from you, and the next month I get more from you. I have no vested interest in doing that. If I could teach you everything in one day, oh my God, I would be a happy camper. Because then I don't have to mess with support or OCR. It's an hour and a half out of the middle of my day today for things I believe I've already taught, but I'm trying to review them and reinforce them for zero compensation. So you have to get your head right and understand the faster I can move you along, the more benefit it is to me. Does that make sense? I mean, I don't want to be whining, but I want you to understand that I have no incentive to tell you to take 100 trades and 100 trades and 100 trades. I'm telling you what it's going to take to be successful. I don't want to drag it out. The more I drag it out, the more I have to interact with you. No offense. So you have to do the head game. You have to do the math from my perspective. And the math says, get these guys in, get them out. If I didn't care, it'd be the purchase and the videos, and I don't even give you an email address to get a hold of me. So I want you to have the quickest. It's not always going to be the easiest, but it's the path that's going to lead to the most success for the most people. And so I'm already taking 15 years, compressing it down to 2 or 3. I've already got a financial disincentive to drag it out. And so when you're sitting there thinking, oh, this is just dragged out. Oh, I'm too good to have to follow the path, creep, crawl, walk, run. You have to understand that thinking is in violation of reality. It makes no sense. And so you have to get over your ego. You guys have to get over your ego. We all have it. You're never going to get rid of it. You have to learn to control it. The bigger thing is you have to recognize when it's there. Say, no, 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 no. Oh, trust me. You have to get past you have to understand the be happy or be right syndrome. If you don't, think about it and ask about it, and we'll come back and address it next week. It's more important to be happy than it is right. You'll get that. Yes, I did. That was the whole purpose of today's session, Clay. And as you can see, I prepared for it by, oh, that's not it even. Damn it. Hold on. There it is. But it's not, I haven't saved it out yet. So I've expanded the price so you can see it for the entry of this daily trade. And blew this question thing up, so I'm prepared, but we're not going to get to it today. So that'll be the focus next Wednesday. Sorry about that. But, we meandered for good things. It's okay. I mean, it's going to take me an hour and 20 minutes just to go through that. And in the old days, when there weren't recordings, I used to do that. We'd have marathon sessions, and 99% of the attendees would hang around. But on a scheduled session, people have work, people have families, it's time to go to bed, or it's time to wake up, or whatever. An hour and a half for an hour scheduled session is long enough. It's not because I don't want to spend the time, it's just because it's a little rude to intrude on other people's schedules. It depends on how my weekend goes. We're still unpacking. And as many of you know, I've got some new duties to take care of at IML. And so that's eaten up a little bit of time. But that'll settle down, and we're going to be finished unpacking this weekend. And I will be finished with the big, hard initial effort with swipe trades here in the next week or so. But the waveology thing, and I'll just make a general thing before I shut it down. You'll hear me talk about, oh, you need to understand your waveology. Oh, this is a waveology issue. And I want to be careful because in the forex world, or whatever financial market where you have trading and teaching, it's easy to say one thing when your definition might be different than others. So I need to bring the definition of waveology to bear. And again, some of you are not ready to hear this, so just understand it's coming in the future. All right. Look, you're in whatever grade you were, 9th grade, 10th grade, and you've got your Algebra 1 book. In the end of the first week of class, you don't flip to the last chapter of the book and tell the teacher you don't understand it. Well, you can, but he or she's just going to look at you and laugh. So you're not going to come in here as a shredder trader. You're not going to come in here to be, even if you manage to correctly go from shredder to tab 29, you're not going to be in here. Now, some of you came in tab 29. You were taught multi-wave, but you're not paying your full dues in tab 29. You're trying to go from beginner to advanced tab 29 trader. So you're not going to get all the stuff that I talk about, because I do have tab 29 traders that were here for the initial training in June 2017. And I have traders in here that have been here 2 weeks. So it's okay that you don't understand what I'm saying. Just it's like it's okay you don't understand what's in that last chapter of the algebra book after your first week of school. So I'll give you the ultimate. First of all, let's look at the definition of harmonic wave convergence, and then I can give you the definition of the pseudo definition for waveology. So harmonic wave convergence is the multiple time frame analysis, or leave out the analysis, the multiple time frame wave exhaustion synchronization. The multiple time frame wave exhaustion synchronization. You have to remember what those plots, I don't care multi-wave with all the plots or tab 29, you have to remember you're looking at multiple time frames. And I say to fully grasp harmonic wave convergence, which I've just defined, you need to have an understanding of waveology. Now, waveology we introduce through Elliott wave. But it's also, I also say, don't try and learn Elliott wave. Don't try and be the wave counter. Don't try and say, oh, this is the wave 3 top. Oh my God, when I see a trader do that, I just want to boot him to the moon and back. Because after 15 years and 3 or 4 really hard studies at Elliott wave, I can tell you, you can't be predictive with it. So we teach little tricks about what may be, what might be with Elliott wave, but also tell you don't trade with Elliott wave. And the next thing you know, I have traders whose descriptions are not so much about what they see in the wave plots, but, oh, this is wave 3 and here's the wave 4 that, and it's like, just take the numbers off your chart. I don't even want to see them because they're not impactful. The numbers, the precision, oh, this is the wave 3 of 5 in the 2 wave, it's, come on. But you have to have an understanding of the architecture, of the structure of Elliott wave. You have to get what the big wave looks like. You have to get, there's a round of lower level, there's an interval below it that goes 1, 2, 3, 4, 5 for that one wave. That goes 1, 2, 3, 4, 5 for the 3 wave. That goes 1, 2, 3, 4, 5 for the 5 wave. And then inside that last 4 to 5 move of the 1, 2, 3, 4, 5 of the 4 to 5 move, there's a 1, 2, 3, 4, 5. You have to understand that in terms of Elliott wave, I'm extending this and I really didn't want to do that, but I'm just getting a little. Here's the reality. You have price. Draw it more realistically. From a structural standpoint, wave 1. Wave 2 is what? Quick and deep. A big impulsivity move, the profit maker in the trade, the 2 to 3 move. Wave 4 is shallow and prolonged. Wave 5. Now, in Elliott wave, so we have a little differential here. Elliott wave and harmonic wave convergence count on that kind of structure. Elliott wave does it with numbers, meaning what? Fibonacci. The Elliott wave counter, looks at the height of this move and projects off to any one of several numbers that might mean the top of this move. And the reason they can narrow that down with precision, because at some point, the 1, 2, 3, 4, 5 of that move, they're going to get in here and measure the 3 to the 5 of that yellow move. And the reason they can narrow that down, this goes back to the movie The Box. If you haven't seen The Box, you got to watch The Box. And they could do the 1 to 3, the 3 to 1 to 5 in very tight order. And if that meets the yellow and it meets the projections for the green, things that by decree, this is now R3. But it's a series of measurements. It's all done on numbers. It's all done on fibos. And this is why when you come in here and try and make some proclamation about the 3 wave, if you haven't gone 2 or 3 levels below and concluded the 5 wave and the 5 wave and the 5 wave, and you've measured it out, you have no way of knowing that's the 3 wave. It may go higher. You might have already missed it. This might have been the 3 wave, and you just didn't see it right. So the concept of Elliott wave is all about numbers, or the reality, when you get down tactically. Harmonic wave convergence is about trend exhaustion. And so remember on the left, when I'm talking about how do you know it's the 3, well, the lower level was the 5, and the level below that in the 4 to 5 move, it was the 5, and the level below that, it was the 4 to 5, and you keep driving that box to the right where you start eliminating the slush, and eventually when you go down 4 or 5 levels, that slush is only 3 to 5 pips versus 50 pips like it might be here. So the size of the box determines the slush, and this is just time frame. So when you're at level 60 minute, 30 minute, you got to drive it all the way down here in terms of what? Measuring the numbers to be able to call this at this level the 3. And none of you are doing that. I know. It sounds great in concept, but it takes a lot of patience and a lot of chart work. Christopher Terry the other night, everybody you need, if you're serious, you need to have multiple 27-inch monitors. I loved it. That webinar had, what did he say, 15,000 watching? They're already paying $160 a month. Now he says you got to have 27-inch monitors because he's telling it like it is. No candy coating it, being transparent. You can play like you're a trader until you step up and have multiple monitors, right? I don't need to repeat what he says. But anyway, back over here. So, harmonic wave convergence, we're measuring trend exhaustion. Remember the definition. Multiple time frame analysis or multiple time frame wave exhaustion, synchronization. So we're doing the same thing. We're driving these boxes to the right, down to what? The 1 minute level. 30, 15 or 10, depending on where you're coming from. TAB29 is 10 and precision traders are 10. 15, 5, 1. We're driving it down, or 5, 3, 1, however you want to view it. We're driving it down to get to that 1 minute box. But we're measuring exhaustion of that 1 minute trade, combined with the exhaustion of the 3 minute, combined with the exhaustion of the 5 minute, combined with the exhaustion of the 15 minute, combined with the exhaustion of the 30 minute, in order to call it this top. We don't label it as a 3. All we know is at that point, price is going to reverse most of the time. And when it doesn't, we have tools to tell us why it's going to creep up there and how it's creeping up there. Underlying both of these things is the same reality. It's based on at time period we're looking at, there are lower levels and higher levels that this wave is participating in or being impacted by. Patrick, I just said I wasn't going to do that because you're not ready for it. And you'll see it naturally as you take a volume of trades. There's not a right or wrong to it. So you want to, people can't see comments. So you have to understand that in concept, these two are very linked. They're very linked. And therein is your waveology. If you understand Elliott wave and realize from a harmonic wave convergence perspective, we don't care about the numbers. We're using wave strength. We're using the trend wave strength. But the concept of the structure is the same. We just don't have such definition. We might have, two, if this is a drawn out 2 to 3 wave, meaning it's at the higher end of the projections of what a 3 wave is. From a harmonic wave convergence perspective, we may have, 2, even 3 convergences in there with a snake in the middle of it all, stretching it out to that point. We will nail this point. To understand this, whenever the Elliott wave trader has measured out and driven his measurements here for what the 3 wave should be, and then all of these are the 5 of the inside move. This is the 1, 2, 3, 4, 5 of the 4 to 5 move here. 1, 2, 3, 4, 5. This here is the 5 move of from this chart's 1, 2, 3, 4, 5. It's the 4 to 5 move in there. And this 3 will be defined, lastly, by the 5 move of the lower level wave. 1, 2, 3, 4, 5 in its 4 to 5 move. So understand that when an Elliott wave trader, poor thing, can actually say, I've driven these boxes down, I've done the analysis at each time frame, I've measured the multiple possibilities for the wave 5 all the way to get to this 2 to 3 move, for which the last move is a 4 to 5. I've measured all of these, and every one of them are synchronized. They're all at the same price point. He can now say this is wave 3 and it's complete. So let me tell you something. When he says that, that will be a harmonic wave convergence. But as I said, there may be 2 in front of it if that's a long move. But on time period, that will be a harmonic wave convergence. Because why? From an Elliott wave perspective, that thing will reverse. is going to reverse out, and it's going to go down to 4. And we can't have a reversal without a harmonic wave convergence. So in the end, harmonic wave convergence here's your big picture summary for the newer traders. Harmonic wave convergence is not Elliott wave. Elliott wave is harmonic wave convergence. I hope that makes sense. All right, one last time, because some of you are have some egos that are stopping you from understanding something. So I'll make this clear as day. Now, yes, the reason we have a training and just we don't stick you on the charts with the indicator and say, oh, go blow it, go make every trade wrong so you can learn. No, you have some training to point you in the right direction. Because your mind doesn't process. Go spend, and again, I'm not trying to be in a braggadocious way here. Go spend 5 years studying neuroplasticity and neuroscience. And you will discover that you learn by doing, not by viewing. You learn by learning what not to do. Now, there are things outside of the trading realm that, you can learn by instruction doing it right. Doesn't mean you still won't learn by getting it wrong, but there are situations where you can, look, if I have a new student and I'm a driver's ed teacher, I could tell him you only go at a stoplight when it's green. I could give them the affirmative. I can give them I don't say this is a stoplight and find out what works. Whether you want to go on green or whether you want to go on red, no. That's a situation where you could be in there and you can give them a definitive, a specific, a finite thing. This is what you should do. There's too much to TAB29 for the neuroplasticity of that to record and be tradable. You will learn what to do right, which will get recorded, by what not to do. And there are some things that just are not going to make sense. And the terms of trading, and I'm going to end here no matter what. In terms of channels, there will be distinct channels at times. And it's really easy in those situations to say that is the channel. And it's really easy in those situations to determine the channel height. There's many things involved. What's another consideration in understanding channel height. Come on. Yes. Where is that? James Howell. Correct. Steepness. See, this goes beyond where a beginner is going to comprehend stuff. We say don't trade channels, once they're past 45 degrees. Oh, you haven't gotten there yet? Okay, you will. Don't like trading channels above 30 degrees. Didn't know that yet? Well, you'll get there. Don't worry. See how you're trying to jump ahead because you don't know this stuff? But there's a reason why upward channels, we buy bottoms. And it has to do with this factor here. Right out of tab 29, right out of the trading. So everybody should know this. That when I do a buy, what happens to price when I do a buy? What happens to the space on the chart? It goes east. I have a candle. Oh, I have another candle. Oh, I have another candle. Oh, I have a retracement. I have a retracement. Oh, I have another candle. I have another candle. I have another candle. Notice the eastbound movement to go that distance. So what happens when you measure channels here, this is not your true channel distance. Because price isn't going to do that. Price is going to take off here, and as it's floating up and creates a candle, it floats to the east too. It has to for more candles to be on the page. So unlike the balloon that's going to go straight up, this is like the balloon going up, but there's a 60 mile an hour or a 60 kilometer per hour wind. And the wind is what? It's prevailing this way and this way. Boom. The channel is so steep that if you have the normal progression of a retracement, as you can see I've drawn it here, this channel can't possibly come back and allow a 50% retracement. Impossible. Capiche? If it takes the normal eastbound, because remember, candle comes down, it's being blown to the east. The wind is still blowing this way, comes to the east. Boom. There's my 38, there's my 50. This is why we buy the bottoms of upward channels and we do not sell. When we sell, we're selling into the correction, which has what? A very short life. Notice the buy from here to here. Notice the correction from here to here. So channel sizing has to do with the steepness of the channel, among other things. And again, these are all much higher, tab 29, module 7. Thank you. So when you blow through tab 29, and not look at this from an applicability standpoint, just blow through to get through it, you've binge watched it, you don't recall all this stuff. It has the neuroplasticity for this has not stuck in. I can always tell who binge watches because they ask questions that was thoroughly covered in the training. One hour, 19 minutes into module 7 to be exact. So sometimes you'll hear me give you a little resistance because I've already taught it. And for the binge watchers, you're not going to remember it. The second thing on channels is that was a true channel. Notice how I drew it. Where price is truly going across the, oh yeah, nice. where Price is tagging the channel boundaries. This is not the 1 minute channel. If these are tops and bottoms of 1 minute wave, the current 1 minute channel is there. Some of you are merely taking the low in your field of view and the high and calling that the channel width. That's not what's happening in your charts. These represents 1 minute extremes. Nah. I'll end it by saying, I'm the Eskimo. You're not going to sell me ice. Okay. Any one of you, and I could say this going back, maybe 10 years. I've coached for 14, but I see a lot of my coaching and the what I understand about traders comes from volume of coaching. So it takes a certain level of volume of traders to see certain tendencies and to learn the realities. But after 15 years and literally tens of thousands of traders, people aren't going to fool me. I know what's what. I can see their charts. I can see their questions. I know exactly what's causing it. So you're not going to sell ice to an Eskimo. None of you are going to rewrite trading history in that terms to where you're going to be the exception to the rule in things like that. All right, tab 29 OCR 009 in the books. I'll have the recording up, not quite as fast as IML because it would be up in 10 seconds if I did, but it'll be up shortly, for sure, probably tomorrow. I will see you next Thursday. Next Thursday we will talk more about interpreting waveology and its impact on your trading with the graphic that Todd had marked up for everybody. And so we'll specifically look at that. And I'll avoid answering questions until the end. And if we have time, then we'll answer questions otherwise. Also remember, don't save your questions. Post your questions in the Facebook groups. Most of them can get answered. Remember, life can be short. So for those people you care and love, let them know you care and love them. I love you guys. Look, when I get grizzly, I'm not attacking anybody. I'm just making some emphasis so it stands out. It's always a battle. Ego is always going to be a battle. We all, I battle it every day. You're going to battle it every day. You want to get a handle on it. You want to see what it is. Most of the time it's there and you don't realize it. So you want to start having those awareness. I just bumped into the edge of my ego. I get it. I see it. Okay. And it's good to admit it. It's good to admit, oh my God, that was ego. Say it out loud. Put it in your post. I did this, this, and this, and then looking at it a second time, I don't understand why I would have done that logically. It had to be ego that made me do that. That's cool. We all have, oh my gosh. All right. I will see you next Thursday. I'll see you in Facebook land. IML guys, I'll see you Monday, Tuesday, Wednesday. Have a great weekend.